wanted to ask you about the impact on the revival of FLDG on early stage fintech companies who no longer have to wait for an NBFC license to lend.
Okay, so a very important question. So everybody is talking about the same, and I will not say that it will not impact. It would impact certain criteria or certain kind of fintech companies. If there is no NBFC license involved, if the person who is a fintech player and doesn't have an NBFC, the FLDG or first loss default guarantee, as we say it, okay. So now the restriction is up to 5%. Okay, so it's like I am giving you 100 rupees of loan, and 5 rupees is what I am keeping with you, that in case of default going more than 5%, I will encash the guarantee. Okay, so in a normal scenario, in an FLDG kind of system, if you actually check, so if the banks, the institution on the 80th day or the 75th day, somebody on the 85th day actually tries to buy back the portfolio, which is going to be NPA. Now, if you see the new regulation, if you are not an NBFC, if the other fintech player is not an NBFC, then there is no position of buying back the portfolio. Okay, I can give that money back to the lender, but I will not be able to buy back the portfolio. The second important hit is actually then I have to put it in my NPA. Okay, so suppose I'm giving it to a fintech player who might be playing at a riskier sector than what I am playing today. Okay, and if I am feeling that my NPA might rise more than 5% or 8% or 10%. Earlier, it was very clear that on the 85th day or the 75th day, whatever the proposition is, that I was to buy back that portfolio. Now, the buybacking has to happen in case if he's not an NBFC, then will be a difficult task. So, of course, a lot of permutations and combinations have to be done. On the fintech player. Who is the fintech player? How is he behaving? How is the market behaved? And of course, the new startups on the fintech side will find it difficult to get average out credit from bigger lenders. Okay, of course, smaller lenders and all will be there, but bigger lenders will have a difficulty because you don't have a track record. So the track record will actually impact your credit for getting more credit at a cheaper rate. Okay, so now if you get at a higher rate, then you also have to lend at a higher rate. And of course, the people, you might not find it that the riskier proposition of those kind of people who are taking at a higher rate. Okay, so the banks and institutions will be there. But however, I think so overall, if you see, there will be a lot of streamline in the institutions. People will be adverse to giving loans at a higher rate. Okay, and definitely some fintech companies who are actually giving us good propositions, they will more flourish. I think so those industry where a shorter tenure, shorter days, and all those things will make an impact rather than a longer tenure loans, because that will be the overall scenario in the industry.